So what does it mean to record retainage? Well, to find that out, we're going to cover a scenario where we don't record retainage, even though we should. So in this first sample WIP report here, the billed to date amount does not include retainage. So 20,000, that excludes retainage. 30,000 doesn't include retainage, so on and so forth. We have our WIP calculated here, under billings of 15,091, over billings of 21,782. In this example, there is no retainage. Now, the balance sheet for this scenario, we have shown under column C, unrecorded retainage. There's obviously no retainage receivable. We're not really billing for retainage in the system, in the accounting software, so you're not going to see a balance here. I want to point out, before we go any further, this example doesn't take into account generally accepted accounting principles, which have a different style of presentation for underbillings, overbillings, and retainage. The language changes to contract assets and liabilities, and depending on whether there's an overbilling or an underbilling on one job, dictates where retainage moves to, whether in current assets or current liabilities. There's a lot going on there. We'll save that for another lesson, but this is just to illustrate a simple example of retainage. So again, no retainage receivable here. We have our underbillings and overbillings, pretty standard. Obviously, the income statement takes into consideration that offset to revenue. Nothing too crazy here. Now we're going to record retainage. Again, what does that mean? Depending on your software, and I know a lot of QuickBooks users out there know how to use the system to calculate retainage automatically, but what you're ultimately doing is you're debiting retainage receivable and crediting revenue. Okay? You're putting an asset on the books. It's a receivable. It's retainage receivable, meaning you won't collect it until the project is completed at the satisfaction of the project owner. And you're increasing your billings. So it's a credit to revenue. So what I've done here is I've taken the billed to date amounts that match the billed to date amounts we had up here, and I'm adding in the retainage. So this is based off of 5% retainage, pretty standard across different states. Usually it's between, I think, 5 and 10%. Sometimes it can be as low as 2.5%. What's happening here is we are decreasing underbillings and increasing overbillings when we add retainage, right? So we take this first project, number 1, for example, 14,091 in underbillings, add the retainage, it decreases to 13,038. Overbillings of 14,615 on project 2, increase to 16,194. Now, when we look at this in total, our underbillings dropped to 13,775. They were at 15,091. Overbillings were 21,782. Now they're 24,309. Okay, that changes your over-under billings. So when you record retainage, that's going to change your over-under billings. So we have a new WIP entry. Okay, now we can go to the balance sheet and see that we have that retainage receivable piece, 3,843. We see the new underbillings amount, 13,775, and overbillings of 24,309. What this does is just shifts the amounts between these accounts, the retainage, underbillings, and overbillings. Ultimately, our working capital is still the same. So current assets minus current liabilities, 51,309 when you don't record retainage, and 51,309 when you do. The big point of all this is for presentation purposes. You have retainage out there, you should be recording retainage receivable, and obviously it does change your over-under billings. Ultimately, everything stays balanced, but it's incorrect to exclude retainage. Okay, we see that the retainage here didn't change how much revenue we recognized, right? This is considering the increase in revenue that resulted from putting retainage on the books and the decrease in revenue resulting from the WIP adjustment. So these two net to be the same amount, $6,691, as our original entry. This is for presentation purposes. The underwriters want to know how much retainage you have on projects. So you want to include retainage in your accounting software as a part of your bill to date amounts. And again, if you're not tracking it through your software, through the different modules, what you ultimately need to do is debit retainage receivable and credit revenue, and that in combination with the billings will sum up to the bill to date amount used on the WIP report. I hope you found that helpful. If you didn't or have any questions, please don't hesitate to leave a comment below. Thanks again for tuning in. I'll see you in the next lesson.